We are going to look at everything. So let's say I'm just trying to what summarize everything we did the other day. I'm going to summarize everything we did so that you get to understand everything. The thing is, if whenever you open your chat, just tell yourself that you don't know what is going on. You don't know whatever is going on in the market, you don't know anything about it. So when you open your chart like this, you first what we do. We are not yet on the what do you call it, multiple time frame. But before you analyze your market, you must first what let me try to um give some notes. When you open your chart, you must first what try to you have to identify, you have to know three things before starting trading. You have to be able to what identify three things in the chart before what starting what trading. So you must first able to what identify what directional bias. You need to what identify the directional bias. um you need to what one, you have to identify the directional bias, then the structure, market structure. Is either structure or nature. Can be structure or nature. Then your entry rule, entry rule. Yeah. So these are three things that you need to what you need to ask yourself, you need to know before starting placing trade. You must first identify the directional bias, and then what do you call it, the structure or nature, then entry rule. You need to what having all these things before what starting placing the trade. So where do I identify my directional bias? We normally identify the directional bias from higher time frame. When we're trading, you need to know the major trend. When you say directional bias is the major trend, the overall hot trend, overall trend of the market. So you go to what? Let me change this. Okay, I'll use step index. Yeah, I'll use this chart because I can see that today many of you are finding it difficult to analyze this market. Um, they were saying, some were saying uptrend, some were also saying downtrend. Okay, looking at this chart, please, uh, please, sorry, someone was making noise. This is how we identify the trend. The trend is what? The trend made up of what? Higher, if it is what? There's a series of what trend, the characteristic of trend. We have a characteristic of what trend that we have a characteristic that's showing that we are in trend or we are in ranging market. And the trend, there's series of the trend is what higher highs and higher lows, and then lower lows and what lower highs. And then the ranging market or choppy market is what equal highs and what equal lows, equal highs and what equal lows. So looking at this recent market, we can see that from here, the recent market nature, of dairy is what ranging markets right now, because we having a series of what equal highs and what equal lows. But within, since we are in the higher time frame, we can still get a certain trend within. Although overall trend from here, you can see that. Let me zoom out so that you can see the red trend again. What can we see here? From here, we can see that we can let me change the color. We can easily identify that from here, previously the market is what? It was in what? Downtrend. Previously the market was what? In downtrend. And whenever market change a trend, or when we said this is either the trend, the uptrend is over or the downtrend is over, before we can say that this downtrend is over, you must what? Break. We having a certain rule. Let me do quick test here. Let me do something here. Before we can say that, let's say we are in uptrend like this. High, low, high, low, high, low, high. Before we can say that this trend, this uptrend, before we can say that this is no more uptrend, or this market is no more an uptrend, until we break this this recent what? Higher lows. Until we break this recent higher lows, we consider the market is what? In an uptrend. Until we break this recent higher lows, we consider the market is what? In an uptrend. Until we break what? This recent higher lows, we still consider the market is what? In an uptrend. Before we can say that the market is downtrend, until what? We break this low, then retest again. We get retest here, then continue the downtrend. Now we having a series of what? Higher lows and what? Lower lows, lower highs and what? Lower lows. Because until we break this one, the market can just what? Let me delete this one. The price, sorry. The price can what? Retrace here and continue here, breaking the neck here, going up, retest and what? Continue the uptrend what? Again. So until we break the recent what? Higher lows, we consider the market is what? In an uptrend. The same way when there is what? An downtrend, until we break the what? The recent lower what? Lower highs, we still consider the market is what? In a downtrend. So from step index, on the step index recently, sorry, looking at the step index, market was what? In an uptrend, in a downtrend. From here, it is what? In a downtrend like this. This is the trend. Market was what? In a downtrend. It was what? In a downtrend. And then we get what? The double bottom here. And it's able to what? Break the neck. But yes, still, it is what? Tracing what? The trend. So we can consider this one was what? Our recent what? Lower highs. We can't call this one as our recent lower highs. But this is what? This was what? Our recent lower highs. This is the market. And it created an equal price around here. This is what? Equal price. We having what? Equal price here. Equal price here. And now we can see that price able to what? Break here. Price able to reject, retest around this zone, and now it broken. Price was to broke out here. I hope you are getting me. So now we can say that now the price is what? The market is what? From the directional buyer is what? Uptrend. Since we have already broken this downtrend, we are now in what? Uptrend. But the rate test, we having a pullback here because we need to get a rate test around this zone and then continue pushing up. But right now we can see that pulling back are giving us what? The consolidation. It has what? Giving us consolidation what range or choppy range. So how do we go about it? So for you to identify that this market is downtrend or uptrend, if you say that we are in what uptrend, you are wrong. We are in downtrend, we are wrong. Why? Because the market is not yet creating the series and is now blocking what blocking the downtrend. It has disconnected what the downtrend the downtrend structure. So we might what get the uptrend. We might what get an uptrend. When we say directional bias, so now we are getting into what an uptrend, but we are in what consolidation market. But since it is consolidating a higher time frame, we can still trade. So how do we go about it? Let me delete everything. Since it is ranging in a higher time frame, we can still trade. How do we go about it? We can see that within the ranging, we can see that at first the market is what creating something like this, and we having what a double top, and it breaks what the neck here. We were expecting market what to retest around this zone, then continue the down again. But unfortunately, it broke the neck again, then creating an what equal price again, and created a downtrend series around here. So we can see that now within the trend, we having a downtrend. Within the consolidation zone, we having a trend inside, which is mini trend. So if you are taking a certain opportunity, if you are taking a certain opportunity trade from here, you must be what much careful by what knowing where you have to place your trade and knowing where you have to what take your profit. Why? Because the market is what in ranging state. So when we're trading this type of market, you need to be what much careful. You need to be what much careful. So if you wanted to trade something like this, you buy at the support level, then you sell at what resistance level. So you buy here, then you sell here. You buy here, then you sell here. So someone were saying that he said market is in what uptrend. Let me zoom out so that I can explain something here to you. Let's try to identify something here. Look at here. What you can see that. Oh, let me draw this one. If you look at here, market able to watch. We are not yet on the order block and then the equilibrium state. I will try to explain order block and equilibrium state to you, but let me use that one to explain this one to you. If you look at here, you can see that markets hit what support zone here, and it pushed away from support area, then created a equilibrium around here. This is what we call the equilibrium. When we get there, you get to understand what I'm saying. And right now, the equilibrium gives us and what a momentum shift. Look at here. So definitely, we are expecting market to what come back and hit this one and continue the uptrend again, hitting this zone. Please, if you understand what I'm saying, type high. If you understand what I'm saying, type high. Wow. Please. Okay. I hope we can all see my chart. I hope we can all see my. If you can see my chart, type high. If you can see my chart, please type high. If you can see my chart, okay. Please, if you can see my chart and hear my voice loud and clear, type high. Okay. Let me start everything again. Let me delete everything and start everything. What I was saying is that Let me delete everything. Object tree. I'm just trying to analyze step index with you. Like, because many of you were confused today. I'm saying that let me call him before. I'm saying that if you are reading trend, you cannot um let me type. If if the market if the market is in an uptrend, we continue we continue looking for buy opportunity until we break the most recent higher low. Wow. If the market is in an uptrend, we continue looking for what buy opportunities until what we break the most recent what higher low. The opposite one is for the downtrend. If the market is what in uptrend, in a downtrend, we continue looking for what selling opportunity until what we break the most recent what lower highs. So it's like, let's say the market is in uptrend like this. What we do is that we continue what looking for what buying opportunity until we break the most recent what the most recent what higher lows. So this is what our recent higher low. So we continue looking for what buying opportunity until we break this level here. Until we break this level here, we still consider the market is in an uptrend. Until we break this low here, this higher low here, we still consider the market is what in an uptrend. So if you wanted to looking for sell opportunity, you must what wait for the recent higher lows to what to break out before what looking for selling opportunity. The reason why we wait for that one to break out before looking for sell opportunity, that because we are saying that the series or the characteristic of uptrend is what higher highs and what? Higher lows. And then the series of what? Downtrend is what? Lower lows and what? Lower highs. So let's say you wanted to buy, you wanted to sell here. You have seen that market is what? Now trying to break this zone. So you wanted to sell here. You are just risking your capital. Why? Because market can what? Just reject again and continue the uptrend and even breaking the structure and continue the up move again. So that's why we need what? To still continue looking for what? The uptrend until what? We break the most recent what? The most recent higher low. So until we break if the market able to break this low, we don't sell here right after the breakout. We don't sell here. Why? Because the reason why we don't sell we don't what? We don't sell right after the breakout. But what? We do what? We wait for what? We wait for pullback. Because if whenever market break a certain zone like this, we consider this zone is what? Is already in what? Low. It is already in low. We buy at a higher price and we sell at a lower price. We buy at a lower price and we sell at a higher price. So if we break this area, this key zone, if a market break the key zone, we consider the market is what? It's already in low. We consider the market is already in low. So we don't sell here, because if you sell here, you are just risking what? Your capital. So let's say if you sell here, where are you going to place your stop loss? You don't have an area for what? Your stop loss. You might what? Risking all your capital. And we don't do that. So when we sell here, you are just risking your capital. We don't sell right after the breakout. I will teach you the one we need to sell right after the breakout and the one you need to what? Wait for the pullback. But for here, if the market is in an uptrend and it breaks a certain area that the most recent higher lows, we don't sell right after the breakout, but we wait for pullback. Because if there is a breakout, we still consider that zone as a what? A low. It has already created a low. So we have to wait for the pullback, giving us a what? High, before what? Making an entry. So the pullback will be what? Around here, or the trend line or the trend channel. I hope you are getting me. So when we get a nice pullback like this, then we are now having an opportunity to what? Place our trade here. It's either here or here. So then you are now what? Selling what? You are now selling at a what? A higher price. So if the pullback happen, we now having a what? A high price. Then you drive the market what? To the downside. So we don't sell here, because if you sell here, the market can what? Just continue. It can reverse on you and then continue breaking this up again and giving you the structure and continue the uptrend again. So we don't sell right after the breakout. We use this one to what? To avoid what? The false breakout. We use this one to avoid what? Fake breakout or a false breakout. So you have to wait for the pullback, giving you the third leg, then before you what? Making an entry, because we sell at a what? A higher price and we buy at a lower price. That's what? Supply and demand. The same way, when the market is uptrend, in a downtrend like this, we don't what? We still consider the market is in what? Downtrend until we what? We break the most recent what? Higher, lower high. We still what? Consider the market is in a downtrend until we break this one. And right after the breakout, we don't what? We don't buy here, but we wait for what? The pullback. We wait for what? The pullback, retesting here, going up again before what? Making an entry. Because if you buy here, you are buying at a higher price, and we don't do that. If you buy right after the breaking out, you are buying at a what? A higher price. So you wait for the pullback, then you make your entry right there. That one, you will never be on wrong side of the market, and your risk entry will be minimized. Why? Because if you wait for the pullback, let's say we having a double top like this, and you wanted to sell, you may try to sell here. You may try to sell here, but because you don't know market will reject around here, maybe the candle will start open and it has already opened to here. It has already opened to here and you wanted to sell. So definitely you may place your trade around this area. And right after your entry, market can what? Just reverse on you, then continue the up again. So the reason why we don't do that, this is the kind of things we need to what to avoid. These are the kind of things what we wanted to what avoid. So we rather what wait for this. We rather wait for market what to break this zone, and we don't want to sell right after the breakout. Why? Because market can what just reverse here, continue the up again. So what we do is that we wait for retest around this area, then continue the down again. So you place your trade here, you place what your trade here, then your stop loss will be what the up here. That one you are risking small, you are reducing your losses. But if you place your trade around this way, where are you going to place your stop loss? You are going to place your stop loss around this area, and from here to here is very high. Price involved is very huge. So if you risk your capital like this, maybe you are trading with $50 account, $100 account, and you have open position on VIX 75 with 0.005, and able to open maybe two positions, even one position here around here, and you place your stop loss here, you will definitely pick about $20 loss. So if you are risking $20 with $100 account, let's say $20 on $100 account, if you pick 5 losses from your trade, your account will go off. You will definitely blow your account. So that's why you need to what analyze the market by what reducing your risk. You don't need to pick a loss like $20 on $100 account, $20 loss on $100 account. You must pick about maximum of what 5 or 10. It should be what a maximum of what either 5 or 10. But if you pick $20 loss on your $100 account, you can't build it. You find it difficult to build. So always when you are trading, know when to what making your entries, know where to what make your entry, or where to what create your stop loss, then try to what calculate everything what to tally your equity, because without the calculation you blow your account, because you need to calculate everything like what like you need to calculate everything to match your equity. Please, if you understand what I'm saying, type high. If you understand what I'm saying, type high on the chat bottom. If you understand, type high. Please, if you understand what I'm saying, type high. Hello? Do we understand? Hello? Please, if you understand, let me see high on the chat bottom. Yeah, I'm recording. I will send it into the page right after. Okay. So for now, if you have any question right now, you can ask. Unmute yourself and ask any question. If you have any question concern about what we have learned so far, you can ask right now. Do we have any question?
Sir.
Okay, I'm listening.
Sir.
Yeah.
I have questions, sir.
Yeah, I'm listening.
So about the stop loss.
Okay.
About the stop loss, sir. I used to place my stop loss below the or above the lower highs.
Mhm.
So I used to place my stop loss there, not at the edge of the double tops. Come down present analysis around there, down,
Um,
where we take our sell entries.
um,
Do you get that, sir?
yeah, I'm listening. Something like this.
Okay. So assuming we have, no, assuming we have a pull out,
Uh,
then a pullback.
uh,
So I used to play my stop loss around the trend line at the neckline.
yeah,
Yes, sir. I used to place my stop loss about maybe 5 pips.
yeah.
Yes, sir. Around there, I used to place my stop loss. If I get
Okay.
up my entries there, I used to place my stop loss about maybe 5 pips or 7 pips.
Okay.
I believe that if the price change and
Mm,
break the neckline, maybe the movement has already changed. That is why I play my stop loss tight.
exactly. Exactly.
Yes,
Because
sir.
you are doing the right thing. There's one thing. If you know you are doing the right thing, if the market hits your stop loss, don't be panic.
Yes, sir.
Why? Because you are doing the right thing. So definitely
Okay.
one day you what you cap everything. So let's say if the price will fail to go down or fail to go on your way, it will create what equal price around this area.
Yes, sir.
There's one thing you need to notice. Whenever price trying to what to fail, it always creates an equal prices. It always what creating an equal prices. That one tells you that
Okay.
price will never goes that way. It might what change the direction that it wanted to go. Please, are we getting it?
Yes, sir.
So that's the reason why what we place our stop loss here, because the next candle open can what can just it can fail to what to go down. So it will retrace around this year and then tested this neck here, then continue what the
Yes.
down move. So if the price hit
Very good,
me,
sir.
if the price hit your stop loss, meaning that trend is what invalid. So you might what reanalyze the chart again and take a new trade.
Yes, sir. Yes, sir. Yes, sir. That's
Yeah,
exactly what I'm saying, sir.
yeah,
God bless,
yeah,
sir.
yeah. You are welcome. Okay. Hello. Who else?
Hi, sir. I'm
Yeah.
done. I'm done.
Okay. Okay. You can unmute. You can mute yourself right now. If anyone have any question, you can ask. Do you have any question? Do we have any question? Hello. If you have question, you can unmute yourself. Then you ask. Okay. Okay. If there is no question, let me trying to what explain one thing to you. There is one thing you need to notice when you're analyzing your market. We said what directional bias, structure or nature, then entry rules. What are the entry rules? Entry rules, we just learned the entry rules. The market principle is what? It's just the same. The market principle is what? Just the same. The directional bias is the same, the trend we are going to looking for. You have to ask yourself what the current nature, the nature of the market. When you say the nature, the state of the market, the state is what? Is it in uptrend or downtrend or what? The choppy range or sideways. If the market in sideways, we don't what? Sideways like this. If the market in sideways, which is creating and what? Equal prices, we don't what? We don't trade. We don't trade this type of market. But we wait to what? Breakout, pull back, then we having a series of what? A trend. we having a series of trend before what placing entries. Because if you try to trade, someone can trade, you can still trade, you can what buy at a support and sell at a resistance. It's okay, that's your strategy. But for me, I will wait, I will stay behind looking at the chart right after the breakout, retest, then before making an entry. So for me, if the market doing something like this, I will stay out from the market and see how the market will play. Because whenever you see something like this, meaning the market might what break at the top or down. So I don't know where the market is going to break. Because let's say um the price is here. Let's say we having equal prices. Market is ranging around this area, and it gives something like it's going down here. Definitely, my entry will be here. Definitely, my entry will be around this area. So right after my entry, market might what break out, reject around here, then break at the top side, retest again, and continue the up. Meaning I have what just risked my capital. So I'll rather wait for the breakout than placing my entry around here. That's the entry rule. If whenever the market is consolidating, we don't what we don't trade. That's my entry rule. Someone can trade, but my entry rule is what waiting for breakout plus retest before placing a trade. Okay, and then the next one, when you make your analysis from the higher time frame, we still looking for what we're still looking for the same principle. What are the principles? The higher highs and higher
Hi,
lows.
sir.
Yeah. Hello.
Hi, sir.
Yeah, I'm listening.
Question about what you just said right now, sir.
Okay, I'm
At
listening.
the next, if price break the neckline out and come
Mhm.
back for a pullback, but if possible the pullback doesn't make the neckline again, can we take the trade by using Fibonacci?
Um, 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 for me, you can use that. We will get there. You will get to understand it very well. You can use
Okay, sir.
yeah.
One more question, sir. One more question about that, sir.
Okay, I'm listening.
At least if you have a sideways in a channel,
Uh,
so if you have a maybe like 3 or 4 rejecting from one neckline than the other neckline, are we going to know maybe the price is going to break this area or is rejecting?
the thing is, whenever we see something like this, that's why you need to what identify what the directional
Do you get
market.
that, sir?
Yeah, I have got you. The thing is, whenever we see that trend, let's say we are in what uptrend, and the recently market is what hitting this zone, rejecting, hitting this zone, rejecting. Okay. Let's say we are in what a downtrend. Market is what
Yes,
hitting.
you get it, sir.
Yeah, we are in downtrend like this, hitting this zone, then we get rejection. Hitting the zone, we get the rejection. Hitting the zone, we get the rejection. Since we are in a downtrend, we don't say that since market is rejecting here, definitely market is going to break down. We don't hope. When we're trading, we don't hope. We trade what the market what does. We don't trade what we think. Because you see some rejection here, you may think that market will definitely what break down. But one candle can just open and consume everything here. I hope you are getting me. One candle can what just
Yes,
open
sir. Yes, sir.
and consume everything here and continue the up move. So the only thing we
Yes, sir.
do
You get
is what?
it, sir.
Breaking out, retest, and then continue. We don't say since we having some rejection zone, we having some weak candle there, definitely market going to break. One candle can just open, then consume everything. So the best way is what? Wait for the thing to break before what? Making entry. Because if you're able to do that, you can even pick one loss on your trade or two, three on your trade and one position, one profit that you able to pick on a day can even overcome all the losses you took. So you must what always go according to rule. If you're able to follow the rule, though I'm not saying I'm giving you the holy grail. I'm not saying I'm giving you everything that um like you can always be profit. No, you will surely pick a loss, but your profit will be what will be more than your losses if we're
Sure,
doing the
sir.
right thing. I hope you are getting me.
Yes, sir. Yes, sir. Sure, sir.
Yeah, we thank God. So right now, I was saying something. What I mean is that if you know your directional bias is for downtrend or uptrend, when you go to the lower time frame, it's the same principle we are going to looking for. It is same principle. We are going to look for higher highs and what higher lows before making an entry. And let me give you one thing. If the market is what in uptrend like this, the retracement, if the market is uptrend on the higher time frame, the retracement from the higher time frame will give us a downtrend on the lower time frame. Let's say if the market is uptrend on what daily
Okay.
time frame, it will if there is taking a certain retracement on the daily time frame, we will get a downtrend from 4 hours time frame, 1 hour time frame, and then 30 minutes time frame, then 5 minutes time frame. So all the entries that we are going to making from there is what just a snap entries. We will get what a downtrend on the what lower time frames. So when market is above or about to what change, or if the whenever the market is what already the retracements has already done, we will now going to see that the structure on the lower time frame will be changed, like breaking the recent lower high like this, then retesting here and going up again. And now when you place your entry around this area, knowing that you are now following the directional bias, you are now what following the directional bias. All what we are doing here is just what retracement. You are having what a downtrend around here on the lower time frame because we having what a retracement from what higher time frame. So when you see a breakout on the lower time frame, if a breakout on the recent what high lower high on the lower time frame like this, now we are following what the directional bias. So we don't what
Okay, sir.
we don't buy here, but we what we buy here. We don't what buy here, but what we buy here. Because if you
Yes,
buy
sir.
here, you are just risking your capital. Okay, I'm listening.
One question about the entries, sir.
I'm
After the
listening.
pullback to the neckline,
Mhm,
after the pullback to the neckline,
mhm.
are we going to wait for a bullish candle to be present, or we are going to take the trade
Good,
immediately because we see that the price is already pulled back to the neckline?
good question. For me, I sometimes don't look at uh what kind of candle that has formed. I just consider if there is a rejection. After the retracement, the only thing it will tell me to make my entry is the rejection. I don't check whether it's a pin bar, a morning star, or even star. No. All what I know is what rejection. So if market pull back and we get a rejection around the zone, then it might what go on what we are expecting. So I'll just place my trade here there and then put my stop loss on at the back of what the week candle. If we haven't, let's say I wanted to place a trade buying here, and I'm having a weak rejection like this candle. I will just place my entry here, then my stop loss will be what at the back of here. Meaning that if the next candlestick open, able to consume this one, meaning I'm wrong. I hope you are getting me.
Yes, sir. Yes, sir.
Yeah. So I will just place my stop loss on the weak rejection. So all what I know is the weak rejection. And there's one thing you have to know. Um, if you're able to have patience for that thing, you always be profitable. Because whenever we're having something an uptrend like this, and a market pull back to this zone, before it will reject to this zone, it will hit here a minimum of two. It will hit here twice. That's that area, that support there, a minimum of two. Market will come back and hit the same area, giving you what a equal price before it will move up. And this one we call it what order block. We will get there. So for me, my entry will be what I'll run here before I'll place my entry, before I'll join the trend. I have to see something here, because if you look at VIX 75, the way VIX 75, let me see whether I can show you the chart. The way VIX 75 move, if you don't take care, you always be on wrong side of the market. Let me give you a typical example on VIX 75. If you look at how VIX 75 move, okay, even daily here, look at this daily chart. Look at this daily chart. From here, we are in a hot uptrend, but look at the retracement, giving out what a series of higher highs and higher lows. Just look at this area. Look at here. You can see that market wanted what is it right now. It wanted to go either up, continue the uptrend, or reject to the downside. But look at how the market is doing right now. If you look at this thing very well, it gives us a what? A double top. It is a double top here. If you can look at it, it's not clearly. Let me change to the line chart and see whether we can see it clear. Okay, let me go to 4 hours time frame.
Yes, sir. It looked like double top.
Yeah, it look at what? Double top. Meaning this one is telling us that market might what? Change to the downside. This one is telling us that market might underline where the what might change to what? To the downside. So for here, before we can place a trade, we need to what? Get a breakout of what? Upside or downside. If only we are looking for, we waiting for what? Daily to place our entries. So now people were saying that now the market is a very strong resistance zone. Should I take a sell here? If you sell here, you are just wasting your capital. That's why we need to go to the lower time. Now we know that market is doing this. Before we can place a trade, we still follow the principle. And our principle is what? Higher high, seeing the trend, see market giving us a higher highs and higher lows, or lower lows and what? Lower highs, before placing a trade. Look at here. Just take a look of here. You can see that before market moving to the upside, here it retraced to here. Before market moving to the upside, it gives us what? A double bottom. And right after the double bottom, market didn't what? Break this neck. It didn't break that area easy. It gave us and what? A equilibrium here. You see that it created some zone here before what? Breaking what? Out. You may think that since we having a double bottom, definitely it will break. So let me buy here. You can enter a buy, then market will reverse on you, going down again. You see where the equilibrium able to you see where the equilibrium drop before going up. It hits here, and let's say your entry is around maybe here. Your entries are around here, or definitely your entries will, let's say if you are using 4 hours to place your trade, your entry will be around here, because you may wait for some candlesticks to finish forming before placing your trade, and your entry is around here. You will definitely take a loss, because definitely if the market hits this area, we will surely get a rejection. And definitely if the market gives us and what double bottom here, the market didn't what push like easy like this. It stayed there for a while. It stayed there what for a while before pushing up. And that staying there, that's what we call it what equilibrium or other block. It gives us a block here, then pulling
Yeah,
up,
that's
coming back coming back and give us an what equilibrium before what going up. So if you look at here, it's the same thing it is doing here. That's why I told you guys to right now stay away from it. It's the same thing the market is doing here. That's the right reason why I told you you should what, stay away from VIX 75 for now, because you don't know where the market is right now going. You don't know the direction. Though we know that the directional bias is on uptrend, but what is doing right there, what is doing right now, is very risky. So you don't need to what trade. I hope you are getting me. If you understand what I'm saying, please type hi. If you understand what I'm saying, please type hi. Okay. Okay. So when you see something like this and you wanted to trade, you need to what? When you go to the lower time frame, like 15 minutes time frame or 30 minutes time frame or 1 hour time frame, that's what you are going to looking for. Let's see 15 minutes time frame, what is doing there. On a 15 minutes time frame, you can see that market is what? Fully ranging here. It's a full of ranging market. So we don't trade. We don't trade this type of market. We don't trade this type of market. You can trade, but I would advise you do not trade. You can decide what to trade, but I would advise you to what to don't trade. And look at what we have here. Before market pushing to the upside, you see that it's the same principle. Before market, it came here, giving us an equal price here. Before this equal price confirming that it will go to the upside, it created a what? Order block plus equilibrium. Then now the equilibrium pushed the market to the upside. I hope you can see. The equilibrium now what? Push the market to the upside, moving to up to hit here. So we have to exercise patience. We don't say that since we having a setup, let's say this is our setup, and say if the market break out, we test here, then we sell here. No, we don't sell immediately. Definitely, there will be a nice rejection like this candle. The next candle or the 3 candles that will open, one of them will come and hit there, giving an equal price before you can sell. So we don't sell immediately. The price hits your interest in what area. We wait for it to give us a strong confirmation. We have two types of signals, which is we have evidence and what confirmation. And then the evidence is the one giving a market will push and giving you an evidence that market might what go on your way. It go to this direction. The confirmation will come in the form of what? Double top or double. It will give you a certain structure, or it might show some momentum before what? Pressing a trade. If there's nothing happen, it's better to what? Miss an entry than picking a loss. Because if you see a rejection around here, you are not wait. Some of you did not wait for the candle to finish forming. As soon as you see some rejection now, then you place your trade. We don't do that. You have to wait for the candle to complete forming before what? Making entry. And when you see a very long rejection, don't think that it may be pin bar. You can see that there is a very long pin bar. So definitely it is a very strong rejection. So I can place a sell here. Let me enter. No, the next candlestick open, will try to consume half of it. If it's a very strong signal, and it will surely confirm for you. The next candlestick will try to consume, and even it can even consume everything. So what we do is that we wait for the next candlestick to open. If it open and coming up, and now we get a very strong rejection and going down, now we enter the trade. As soon as you place your trade, you will be in blue. If you're able to wait it like that, as soon as you place your trade, you will be in blue color. You will be in blue color. Please, do we understand? If you understand what I'm saying, please type hi on the chat button. If you understand what I'm saying, please type hi on the chat button. Type hi. Okay. 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 So um 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 if you have any question, you can ask right now. Do you have any question? This coming Sunday, we have a multiple time frame trading. We will try to analyze market from higher time frame to the lower time frame. We will try to know how to. Okay, I'm listening. I'm listening.
About the equilibrium.
Okay.
So assuming the price come back to the entry level of the buying areas, so and the equilibrium turn it back up, can we take the trade on the 4 hours time frame?
Come again.
On the 4 hour time frame.
Come again.
We see
Come again. Let me hear you. Like, I don't understand your question. Come again. Hello?
On the 4 hour time frame.
I can't hear you well. You type the
We
question.
are expecting a pullback from the breakout of the double bottom. Okay. So on the 4 hour time frame. Are you hearing me, sir?
Yeah, I can hear you.
So on the 4 hour time frame, we are expecting we have a double bottom. So we are expecting the price to pull out and pull back to our key level so that we can place our buy trade. But the price was failed to break out. So the price come back down to where it starts at the entries of buying on 4 hour time frame. So you now said we have a equilibrium around there, that equilibrium took it up. Can we take the trade around there?
Yeah, we can.
That's my question.
We can take a trade by going to the lower time frame, and you go to the lower time frame and see some rejection there, giving you another order block and equilibrium. Because if there is a rejection on the higher time frame, let's say if there's one rejection on the higher time frame, we might have about 6 or 3 candles on the lower time frames. I hope you are getting me. So how that candle, how that candle has formed will tell you that the market will go up or it will go down. I hope you are getting me. So that rejection, that low keys, that low keys that created on the higher time frame, the formation behind of that lows we can see that formation on the lower time frames, because that lows on the lower time frame give us a certain candlestick patterns on the lower time frames. So that patterns will tell you that sell at this point or buy at this point. Do you understand? If you understand, please type hi.
Okay.
Yeah, we thank God. Okay. Isa, do you have any question? Isa, do you have any question? Isa Abdul, do you have any question? Hello? Yeah, do you have any question? I can't hear you. I can't hear you, please. Um, Falaki. Please, do you have any question? Falaki. Any question? Falaki.
Okay, sir. Question, yes, sir.
Yeah, okay, I'm listening.
Another question, yes, sir. About our synthetic indices
30.
from volatility 10 to down to 75,
Okay.
both seconds and the ordinary one.
Uh-huh.
Which one is it good for trading? I can see some pairs that their movement is not good. They are rejecting before they will go to their direction.
The thing is,
We have 10 seconds, 10.
if whenever you open the chart and that chart is not
Okay.
following your strategy, you must what? Stay away from that
Okay.
market. Everybody having
Okay.
his or her own strategy. So if the chart is not following your strategy, you must stay away from that pair or that instrument. You must always following the chart
Okay.
that following your strategy. We analyze, you have to, when you wake up, try to analyze all the assets. At least if you're able to analyze 5 of them, definitely you get 2 or 3 or 4 of them following your strategy. When you get the one following your strategy, then you have to focus on that asset. But the one that is not following your strategy, you must stay away from it. Do you get it? Okay, okay. Someone is saying something here. He said what?
Okay.
I don't have any question right now, so you explain. Your explanation makes everything seems easy. So thanks for. Okay. Then we thank God. Techno Camo 15. Do you have any question? Techno. Techno. Hello. Techno. Please unmute yourself. Then if you have any question, let me hear you. Techno. Okay. I'm sure there's no more questions. So we will end here. Thanks for joining me here. This coming Sunday, we will have another meeting concerning about multiple time frame trading. I may send this one on the. I'll upload a video on the Telegram channel. You can download it, then watch it again. Okay. So I'll always be available for you. I'll always be available for you. If you have any question, you can ask on the platform. If you have any question, you can ask on the platform. Don't chat me privately because someone can learn from that question. So if you have any question, just ask on the platform. Even someone can even answer you without me. Okay. May God bless you all. We will meet again this coming Sunday. Goodbye.